Welcome to an introduction to accounting brought to you by Parkbench Tutors. In this short podcast we want to look at why we would make use of variables when setting up things like the cash flow statement. First of all, let me show you how we have variables, what they are. If I click on this cell here, then if I go up to here, I look and I see that the cell is called C34. It's called C34 because it's in column C and row 34. And if I look at this one, the sales percent increase per month, I see that it's C38 because it's in column C and row 38. But now let me go over and look at this one, and if I go up to the reference here, you can see that it isn't referenced by this cell. In other words, we know that this is in column D and row 38, but that's not what's appearing up here. Let me just widen that for you. What's appearing is the sales increase per month. What we've done is to name this cell after the description of what it contains, and if I go down through this series, you can see the sales in December, right? I've named the cell again after what it contains, and so on. This is my bank balance, this is my office expenses increase, the percentage increase per month, and so on, right? So let's just look at this one here. This, as we see in column D, row 31, is called rent. And if I go to the rent line on my cash flow statement, and I then click on column F, I can see that what it says is, although it's got a value of 600, it says equals rent. So why did it get the value of 600? Because where we took the cell that we labeled rent, that was the value that I put in, 600, right? So I've labeled all of these cells. If we go across, you can see they all say equal rent, right? Now, why should I do that? Well, here's the reason. If the rent changes, right, so supposing the rent isn't 600, but the rent becomes 700, right? As soon as I enter that, you can see that it changes the value for the rent all the way along the line. So in other words, instead of having to make 12 different entries, one for each month, when there's been a change in a variable, I just have to change the value in the cell. You can show the same thing with wages. Let's say wages were only 1,500 a month, right? So previously they were 2,000, now I'm going to reduce them to 1,500, and again it's altered these all the way along the line. And incidentally, the values for various other things of course have altered as well. If I alter rent or alter wages, then obviously I've altered the expenses, and that alters my total outflows, which alters my closing balance, which will change the opening balance for the following month, and so on. In the same way, let's look at the sales revenue. We start off by saying that the sales revenue here will be equal to the variable sales in December for the previous month, right? Now when we go to the next month, we've said that we've got a 5% increase. In other words, it's the previous month plus the previous month's multiplied by the sales increase month percent, in other words by a 5% increase, and so it goes on all the way along the line. That's why these figures keep increasing. Now supposing we alter that and we say that our prediction is going to be a bit better, we'll make it into 7%. Remember, this was 10,500 here for February. So if I alter it, then it increases the sales revenue projection, and of course it makes the same increase all the way along the line. So that really is the purpose of using variables, right? It saves a lot of time once you've constructed your spreadsheet, because you can present different scenarios very quickly. You only have to alter the value in one cell. You don't have to go through a whole series of 12 cells, in other words for each year, one for each month. And something to remember here is try and set out your variables all in one place. So what I've done here is I've essentially put all my variables together in a little table, and that allows me to see where they are very quickly and to make the alterations quickly. Thank you.